We need to get to oil right this very second, because while it is trading in the aftermarket, boy, is it trading down 4.75%, getting crushed. Here's where it settled, 46.60. We're only 8 cents above that right now. Look, part of the problem is that the companies that operate oil rigs appear to be getting more confident. Why is that a problem? Well, when the rig count, which is pretty much a proxy for activity in the oil patch, rises, then that means too much supply. It has risen to its highest level in 6 months, jumped another 11. So let's get right to the floor show where oil is traded in the U.S. That's the NYMEX. We've got traders at the NYSE and the CME too. But let me go first to you, Elliot Warren. Too much supply once again. We also have a whole bunch of other issues with oil. You got the supply glut, but we got some weak data here, specifically indicating that the economy here in the U.S. is quite anemic. So the two together equal real bearishness at the moment.
Well, you know, Liz, I think that we've talked about this a lot with crude sort of consolidating around that $50 mark, and now it's down some. Personally, I look for it to. It wouldn't shock me if it rallied back up a little bit close to $50 and sat there more, but long term, I definitely believe it's going down. I think you really have to keep an eye on natural gas as well. That's down almost 10% today. It's a $3
Why? And
contract.
that's interesting because it's been having a rally here and there.
It's been up about 50% over the last month, and today it gave back about a quarter of that rally.
7%
so, I mean,
to the
natural
downside.
gas is a domestic product, really, still. I mean, we're still not really, shipping you LNG yet, but natural gas is really something, a lot of volatility. I look for that to keep going lower as well.
Let me get to Teddy right now at the floor of the New York Stock Exchange. It's not a surprise that after 4 very significant rallies post-Brexit, I mean, it was pretty stunning. Look, in the 2 days after the British decided to exit the European Union, the markets fell, well, at least the Dow, down 871 points. Then the following 4 sessions, they scratched back 809. So you give up another 100 points or so. Is that normal?
I guess so, Liz. It's sort of a good news, bad news proposition. The bad news is every time we seem to get up to this Dow 18,000 level, the market just runs out of steam. The good news is that the rally that we saw last week was really broad-based, much more so than we had probably seen for the last 6 to 8 months when we've seen rallies. So that was really good. And number 2, clearly the Fed is on hold with interest rates, so that's a plus for the market. But the other negative is that when we get up here, they just seem to run out of steam, and there doesn't seem to be a catalyst to punch them through, significantly punch them through this Dow 18,000 area. I don't know what it's going to be. The problems are still out there, added by Brexit now, which we didn't have to deal with before last week. Yeah. So my guess is it's going to be tough sledding from here on out.
Well, yeah, I mean, you've got thinner volume, Larry, but I need to talk about, we said gold was the fear trade. Let me tell you something, Treasuries. This 10-year yield hitting an all-time low, and that was earlier, 1.37%. I'm looking at about 1.36 at the moment for the. I mean, this is unbelievable here. People are barely getting any money back just to park it, not to mention the negative rates, which, folks, please mark this as a day that Liz is warning you that you see negative rates in Switzerland, negative bond yields when it comes to Germany and Japan. This is a possible real problem here that could blow up and scatter all kinds of drama over people, right?
Yeah, it definitely could, and it's really scary to see yields as low as they are, but we have to remember that sentiment can become a fundamental, and that's what we're seeing right now. The sentiment is so dour, so half-empty, everything
Larry,
is worst-case scenario with growth.
But Larry, is that the very point, then, that where people should be really selectively picking good names?
Oh, absolutely, and that's what I went underweight a month ago. But when it comes to names, I still would look for high-dividend, old-world stocks to buy. When it comes to Treasuries, I'm really nervous about buying them, although I do own them in the fund. What I'm really worried about, what nobody's talking about, is fiscal stimulation. Because right now, monetary policy is exhausted. Nobody cares about it anymore. And what happens if governments start borrowing at these low rates for infrastructure projects? That's going to blow up the bond market overnight, just with that kind of news coming out. So that's what I'm worried about. But yeah, right now, it's a lot of bad, poor, dour sentiment running this Treasury market.
I think I just heard Teddy groan, but we got to run because the president and Hillary Clinton.
Liz, can I say something real fast?
Very quickly, as we await the president.
I want to point out is, energy led the rally, right? Energy is what everybody talked about leading the recovery. We're trading 18,000 without energy's help. I mean, I think there are positives to look for in that equity market. I'm no equity guy, as you know, but with oil not helping and the stock's still staying high, I mean, I think that's something to look at.
Oh, the oil guy jumps in on the equity side. Elliot, nice move there, a little pick and roll.